Singtel share price has dropped to 52-week low again at the time of this video. So is it bargain or a value trap? So in this video, we're going to talk about Singtel's various business divisions, their performance, dividend track record, and also do stick around until the end because I'll be sharing what I like and don't like about Singtel so that you get a better picture of the business itself. And to be honest, it's not easy to understand what's going on with Singtel because they have so many different divisions and associates. Look at the number of open tabs I have, looking at blogs, news, analyst reports, and corporate presentations and more. So how can you help me in return? By smashing the like button and subscribing to my YouTube channel right now, so you can learn how to invest for the better and check out more winning stock ideas. And I also not forget to share with you our favorite financial meme. Okay, so with that, let's jump into Singtel's background to begin with. So first of all, Singtel is a rather complicated conglomerate because it operates in more than 20 countries with a customer base of over 700 million users. The key business units include four main divisions: Optus, Consumer Singapore, Group Enterprise, and NCS. On top of that, they also have the regional telecom associates where they have a significant interest in, such as Indonesia's Telkomsel, Thailand's InTouch and AIS, Philippines' Globe Telecom, and also India's Bharti Airtel. So that's quite a lot already, right? Anyway, so now let's touch on a quick summary of each division's performance first. Consumer Singapore is the segment that most of us are familiar with, the broadband and the mobile services as well as GOMO. While the revenue is up 3% year-on-year basis due to the increased 5G adoption and data roaming recovery, net profits are rather stagnant. Next, Group Enterprise. So this is like the B2B segment. It has also a flat revenue growth, but the new data center capacity being added can drive growth going forward, which we'll cover more in details later. NCS has the aim to become a pan-APAC digital services provider, and they acquired the Dialog Group, Australian-based one, right, in March 2022. Although it has achieved strong 21% revenue growth, the EBITDA is down 26% due to post-acquisition costs and higher staff costs. On a bright note, NCS is pursuing regional projects and already secured strong bookings of 1.3 billion currently. Optus, the fourth division, was adversely affected by a major cyber attack just last year, but quickly regained ground as they gained back the customer trust after the cyber attack. And now let's go back to the regional associates. All right. So a significant outperformer here is Airtel. All right, with the profit before tax jumping 129% year-on-year due to higher average revenue per unit through higher usage and tariff hikes. All right, the other segments remain more or less stable. Okay, now that we have a basic understanding of Singtel's corporate profile and the various divisions, let's dive into what I don't like about Singtel first, or perhaps the reasons why the share price has gone below $3 since 2020 and never able to punch above it. But first, a quick disclaimer here. All content is strictly for knowledge and entertainment purposes only. This is not intended to serve as any recommendation to buy or sell a security. So with that, let's go into the analysis proper. As previously mentioned, the first thing that I don't like about Singtel is the fact that the previous management team has sort of wasted a huge chunk of the free cash flow that they generate year-on-year basis. They keep acquiring other companies like MOB and other companies, but there's no clear plan of what they want to do with them. and I don't see any synergy as well. Secondly, when the conglomerate gets too big and messy, investors like me will usually stay far away from it because it's just too time consuming to analyze it. So for me itself, I spent like 1 to 2 days just reading up about Singtel. Okay, and imagine just for the India's associate Bharat Airtel, if you want to fully analyze this associate itself, you need to understand the India's consumer market, competitor landscape, growth prospects, risks involved, and so much more, right? So long story short, I think that people tend to just avoid this company when they have so many moving parts that can bring about so many unforeseen risks. And the third thing that I don't like is, sadly to say, all right, the top line of Singtel has been flat or actually coming down gradually in the past decade itself. So whatever leading position it has in the past is eroded with the influx of many lower price competitors, and hence the gross margins have come down sharply as well. And last but not least, all right, so the dividends part, all right, also has been coming down since 2018 because it's following the earnings, right? And when the earnings come down, so does the dividends. Hence, while so many people revere Singtel as a dividend darling in the past, it is no longer the case now, and investors may be ditching it for more stable stock in the face of an upcoming recession. Okay, enough of the downside, right? Let's talk about the bright side. So there are also, quick pause. Weibo just launched a great offer where new users just need to fund any amount and you can get 3 free fractional shares. And by any amount, I mean even a minimum of just $1. If you maintain your funds for 30 days, all right, you will get another 2 free fractional shares. So for those who have not heard of Weibo, they are regulated by MAS, and it is also a very popular trading brokerage app based in the US. If you are interested to sign up, I have placed the link down below in the description. With that, let's jump back into our video. A few things I like about Singtel, especially after it has streamlined into 4 main divisions. So firstly, I applaud their decision to focus on the B2B segment through NCS and group enterprise because I believe that's where the big money is. I like how NCS is leveraging on the digitalization trend and now packs a huge order book of 3.5 billion. There's also a big opportunity for NCS to offer their digital services to developing countries like the Vietnam, Philippines, and all that, because they already have a strong presence from their telco associates, right? Next, I think many people fail to see that, okay, Singtel is growing the data center capacity gradually, especially the recent ones in Tuas, Singapore, and also the first data center in Thailand, where they partner with Gulf Energy and AIS. Both data centers will begin operations in 2025, so 2 years time. And given that the existing 60 megawatt of capacity, right, translates into a positive EBITDA of 86 million for first half FY 2023, we can, safely say that a 120 megawatt in Singapore and 20 megawatt in Thailand can likely offer perhaps 400 million EBITDA by the year 2025 for the whole year itself. And I believe that data center business is a no-brainer kind of growth to focus on, especially if you have the cash flow to park and to build all these data centers. It's just like recurring income, just like YouTube, right? Anyway, so third, I like how the new CEO is sharpening Singtel's focus and looking to unlock their value via divestments or spin-offs of various assets. Here are some of the divestments made to date. All right. So first of all, they have been selling off the 3.3% of Airtel for $2.25 billion. selling 70% stake in the Australian tower assets for a 400 million net gain, and also divesting MOB for US dollar 239 million. So the last thing that I like about Singtel is probably the strong financial position it has and the consistent cash flow generation. As of June 2022, the net gearing is at a manageable 26%, while average debt to maturity is quite long at an average 6 years. All right, so we can say that it's quite safe at the moment. All right, credit ratings are also top notch, with Moody's and S&P Global giving an A rating. Current dividend yield is only around 4%, but at least it's well supported by the incoming cash flows by the main business as well as the associates, and at the same time allowing Singtel to grow steadily in the long run. Okay, to conclude, all right, let's go back to the original question we want to answer at the beginning of this video. Singtel share price dropped to 52 weeks low. Is it a bargain or a value trap? So here are my opinions. Personally, I feel that Singtel is more like a gap or growth at a reasonable price stock rather than a dividend cash cow now. Okay, so investors will need to take a bet in the future here, given that the past 10 years performance of Singtel is mediocre at best, and it highly depends on whether you believe in the execution of Singtel's strategic reset, okay, the delivering of the 5G and the B2B digital services, growing of the data center portfolio, and also the upcoming digital bank partnership with Grab. If you find this video helpful, do help me to smash the like button and subscribe to the channel. All right. Remember to also click on the notification bell, right, so that you get to know whenever I release a video again. Next up, all right, do check out this video over here for 5 defensive dividend stocks with at least 4% dividend yield. And I will see you next time. Thanks for watching and bye bye.